So this is going to be a trade breakdown. I'm going to break down two trades that I've taken this week, and it's probably going to be it for April, and I'll see how May trades. The reason I'm making this video tonight and not for the weekend is because I will probably not be able to do the weekly report this week. I'll try and do the weekly commentary because Eid is going to be, towards the end of the week, and it's going to take up my entire weekend. So it's better if I make this now for you guys, so at least you get something, for the week. So I took a swing trade that I lost, but I managed that loss from a -1% to I think it was 0.4%. So we're gonna touch on how I managed that trade and you know the reasons I did that. Then we're gonna go over a day trade where I won a decent sized trade, and we're gonna break both of them down. So let's start with the swing trade, the loser first, right? So starting, from the weekly commentary before, I expected a bullish week, right? So any protraction down into a discount PD array, I will try and frame a long off of, targeting, the previous week's high for my swing trade. That's usually the parameters I use it for. Due to swing into some level of discount or sweep on the previous, week's low. Um, and that's what usually entails the stage for my swing trading protocol, right? So we have this mitigation block here, right? Up close candle, failed swing, move higher, right? This up close candle is a mitigation block, and we had this fair value gap. So I entered around here, right? My stop loss is here. Now my stop loss on the 4 hour is going to make more sense. The stop loss is underneath this institutional order flow entry draw right here, right? So we had this, you see here, we had that run on the stops and that displacement, that breaker block, this institutional order flow entry draw from this candle's high to this candle's low, dip down into it, and then we moved away. So I put my stop loss under there because if price came and went all the way under it, I'd want to be out there. We'll probably target these lows, right? Now, if we go back to the daily, right, you see how Monday traded down and then Tuesday away from it. Now, from here, I thought I had it, right? I thought, Wednesday we're likely to push up, and I would have even looked to close out at a 1-to-1 if it was, quite slow edging. Now, then in the interbank chat, which I had sent this into, right, I told you guys I was going to swing long, and I told you guys exactly where I was going to shave my stop. I said 109,225 to shave the stop at Tuesday night, right? Now that is around here, right? If I just move it here. Now that's the low of this candle, right? I was expecting now for an open low high close delivery, right? So I shaved my stop loss there. You see how now that is like half of the risk gone, right? Now it did go and stop me up. That's totally fine. Every single loss is gonna incur, every single system is gonna incur some level of loss, and that's totally fine. But how can you minimize and mitigate your loss? This is the thing. You see, right, what's the risk to reward on this trade? 4.28. Let's go back. 2.21, 4.28. We've essentially increased the risk to reward by minimizing, the risk. Now, I said this in a weekly commentary before about managing your trades. If you can manage your trades well, because usually I do this on a swing trade, I rarely ever take a full 1% loss. On Monday, I nearly did take a full 1% loss because it went in there with speed, right? But usually when your stop loss is safe, underneath a few PD arrays, where, essentially when your stop loss to have resistance, you know, before it gets run to. You don't want to just put it beneath one PD array here. ICT has a rule which he says usually put under 2 or 3 PD arrays, just because then it creates a bit of resistance to the run on your stop loss. Now that run on your stop loss, that resistance is going to give you time as a trader to then make the decision. Should I take, should I hold the trade and should I ride it out and take a full 1% if it comes, right? Because it can go into drawdown and it can reverse, right? Like this trade. Or should I cut it, or should I look to manage the loss? That's a decision you as a trader have to make, right? Now, if you can manage losses like how I did over many trades, let's say I took this trade 10 times, right? Let's say I lost, 5 of them. Let's say I lost 5 of them. How much um, loss in total would that be? 0.4 times it by 5, 2% loss in total. And then I win 5. That's, 2R times 5, which is 10R. 10 minus the 2, that's 8R. Now, if I took 1%, full 1%, do you see how, you know, the the return at the end of it is a lot less. If you can manage trades well like this, those 2 to 3 R trades are going to feel like bombs to your account when they land. Essentially, you're manipulating the reward, the risk to reward, right? It's very unlikely to hit, 4 or 5 R trades every single day. But if you can manage trades well, you can turn that 2 R trade, once you manage the risk right, into a 4 R trade, like how it shows now, right? Because if I lost this trade, which I did, was it's going to only be 0.4%, right? Now, going straight into the next trade, right? When I saw this, because I was monitoring it in the New York session, I had this marked out, the previous day's low, and we had this marked out, which is the previous day's high on the DXY. Now, it's inside early in the New York Open kill zone, right? So we see this high, right, form in the lunch period. We run that high and that displacement lower, disrespecting these fair value gaps, right? And when I saw, this fair value gap get disrespected here, then it was pretty much hunt time. There was an institutional order flow entry drill here, right? Now, if you go to the euro, you see that run on the previous day's low, right? Now, when we see this, this is what I mean by stage, right? What is your checklist? Because the direction I was hunting in for this week is long Euro USD. That's the direction because of the weekly profile that I have had set out, right? Now, then you wait for a stage. What is the stage? What is your checklist to entertain price? For example, this was the trade setup here. TP at the rejection block above there, and we're going to touch on why the stop loss was here in a sec. All right, this was the trade. When we had this, right, that market structure shift, we had this big candle up, 2 down close candles are order block, right, and there was a little fair value gap here, right. When this candle closed, enter, open high low close, open low high close, yep. These 2 down close candles is a bullish order block, right. Now the stop loss, why is my stop loss here? If you're on the 5 minute, I really recommend doing this. On the 15 minute, make sure that if there is a fair value gap here, which there is, make your stop loss consider the 15-minute time frame. If we go back here, I could have put my stop loss, like here, for example, right? If I wanted to, I could have put it there. But you see how that's inside of the 15-minute fair value gap. Is rather it will be safer if I consider this time frame because there's a fair value gap here and the breaker blocks here, and I put my stop loss here. Now, I didn't want to put my stop loss all the way down here because you can see how it changes the whole dynamic of the risk to reward, right? I'd rather here, and if I took a loss here, that's fine. I would have been okay with that loss because, I would rather get in the trade here with my stop loss here than rather have, a one-to-one risk to reward. Now, I was targeting this, the most closest, easiest target. Seeing it in hindsight now, it would have been very nice if I caught all of this, need a 5R trade. But what do we need? We just need a 2R, something that is very textbook and easy to grab, right? I didn't really change the stop loss in this trade, but essentially, when you saw price come up here and this break this high, right? So that retracement down higher, you see how when a trade is playing out, new levels of invalidation comes out, right? When you see this happen, right, this move into this fair value gap and move away from it, there is no reason, and I didn't do it because price was riding very fast, right? You should absolutely minimize the risk there, right? A good way to see it is this, and this is something that ICT had taught in his mentorship. When you're inside of a trade, if you see that as your trade is playing out and you see another setup that happened in your direction go and play out like an institutional order flow entry drill, which is why I mentioned it in the previous weekly commentary, shave your risk, right? So for example, we were in from here. Now you see this institutional order flow entry drill, this fair value gap here, and I move away from it. That could have been another entry to go long. So because that's already happened whilst we're inside the trade already, we should look to shave our stop loss. Try get to break even, right? Now, it doesn't mean you jump all the way to break even straight away, right? Because this is very far away from where we entered here. If this happened around here, maybe shave your stop loss to under this low and then work your way to break even. Once you've worked your way to break even, look to start closing out the trade, right? There is no reason why you should be break even and you shouldn't take a profit, right? It's either one of two things. It's either you just were greedy and you didn't want to take a partial or full close the trade, or you went break even way too early and price stopped you out before going in your intended direction, right? So just to cover this trade again, because swing trading, not many of you do it. More of you are more geared to day trading. Direction. I was favoring the daily candles to trade higher. Now the stage, run on sell stops, clear displacement away, right? I looked for the fair value gap, which was very minute here, and we had this order block to back price. You see how here there's no fair value gap? Otherwise, I would have tried to get in here. I'm hunting that fair value gap, right? Fair value gap here. If I missed that one, perhaps I would have waited for this one. But that's what I wait for. I wait for clear direction, a fair value gap. Preferably if you can match fair value gap with a block like this, for example, fair value gap, order block, right? Even if you take it more to the left, there's a breaker block here. Those are the kind of trade setups you want to take. Stop loss safe. If you can, if there's a fair value gap on the 15 minute, if you're on the 5 minute, consider that fair value gap as well for your trade. Target the most easiest target that is going to give you a 2R. You do not have to aim for this straight away. You can work your way there. You can partial out of the trade and leave a runner there. That's totally fine. 2 to 3R is all you need to be profitable in the long run, especially if you're mitigating your risks like this, right? If you're taking your 1% losses and you're reducing the stop loss and you're shaving the stop efficiently, where a lot of your losers are 0.5, 0.4, zero point 0.3, those 2R trades are going to have way more weight to your account, because essentially when you shave the stop loss, not partial, but when you shave the stop loss, your take profit benefits the full punch of the lot size that you're using to trade. And the stop loss is now just smaller in size so that there's less risk on the trade. When you partial, it takes out both sides. Your percentage is going to be less on the profit and less on the um, stop loss. But shaving your stop loss efficiently allows it to be one-sided, where it's reducing your risk, but the reward is going to still be, in full benefit. So consider that. Um, so I hope this helps. I don't think there will be a weekly report this week, only because my hands will be tied. Everything will resume normal next week, hopefully. I'll try my best to get a weekly commentary out, but until then, I'll catch you guys in the next one, and take care of yourselves.